Welcome to another edition of Focus on Alternatives, sponsored by ADISA, the Alternative and Direct Investment Securities Association. I'm Damon Elder, the publisher of the DIWire.com, and today we're joined by Greg Mausz, who's Chief Operating Officer of Preferred Capital Securities. Today we're going to talk about what is often a vexing issue for would-be sponsors, and that's how do you distribute through the retail channel, at least alternative investments. So you're an ideal person to talk to about this, obviously, with your broad experience in the MBD channel and in the alternative. So why don't we start by defining what we're talking about? What exactly are we talking about when we talk about the retail market in regards to alternative investments?
Sure, thanks for having me. So retail market, we're really talking about the mass affluent accredited investors. I'll commonly call it kind of Main Street investing. So not Wall Street, not high-end family offices, not institutions.
Okay, good. And what are we seeing in the market? Is it growing? Is the interest there? I mean, what are you seeing?
Oh, that Main Street market's definitely growing. There's a couple of trends that are really driving it. The two are, number one, demographics, with the baby boomers, the size they are, the wealth that they've accumulated, and it's managed by individual financial advisors. The other trend is the move from pension funds or defined benefit plans to defined contribution plans, otherwise known as 401ks. So as people retire, they have this giant nest egg built up in their 401k that gets oftentimes rolled over into an IRA. And then that IRA is then managed by a financial advisor. And these financial advisors need to find all different types of traditional but also alternative investments to create the right return matrix for these investors.
In recent years, we've seen an entrance into the retail channel of some really significant institutional players like Blackstone and KKR, Starwood, et cetera, and the list is growing. So I'm always really interested in why are these institutions coming into the retail channel when we know it's a less efficient space. It's much harder to raise the capital than it is to pick up the phone and get a few $100 million. So why are they coming into the retail channel?
Really for the two main reasons I just listed. I mean, they're following where the money is. And those defined benefit plans, those pension plans, they used to be able to write big checks to these money managers and manage the money, but that's not where the money is. The money is now in the hands of the mass affluent, with the advice of their financial advisor.
Gotcha. And so, the retail channel is a bit different. So how do you access it? If you're interested in joining this industry, how do you access the retail market?
Sure, so issuers or companies that need capital, they can go directly to investors and try to explain the story. That can be costly and inefficient as well, but you can go through financial advisors and you explain the products and market the products to financial advisors, and as they meet with their clients, if the client objective aligns with the product objective, whether it's growth or income or alike, then the financial advisor can make that recommendation to the client. So,
what's the attraction to the sponsors? Why should they be entering the retail channel, or why are they entering the retail channel?
So as a money manager or as a REIT looking to grow or a private equity firm looking to grow, it's best to have multiple sources of capital, both equity capital and debt capital. And so you can go to banks for debt capital, you can do other institutional debt capital, but you can also come to the retail market to raise debt capital, and you can also come to the retail market to raise equity, whether it's common equity or preferred equity. But the mass affluent, the Main Street dynamics are different than raising capital on Wall Street, which may be different than raising capital from institutions. So as these companies try to raise capital to produce returns, it's helpful to have different avenues.
Okay, and so then what are retail investors looking for? How do you target them?
So retail investors, again, most of these are in qualified accounts or the wealth that they've accumulated throughout their life. So most of them want to protect it first. So they add alternative investments or non-traded investments into their portfolio to provide diversification and non-correlation. A lot of these non-traded investments don't fluctuate with the market. So it can have a calming effect on the volatility as as we see in stock and bond markets.
So, Greg, you've been in this market for multiple decades. We've both been around for a long time, and we've seen sponsors come and go. It's not always the easiest place to succeed in as a sponsor. So, how do you learn to successfully enter this space and achieve real success?
That's a good question. And the more research a potential sponsor or issuer can do, the better. So there's associations. We're here at the ADISA meeting. There's other associations that are out there as well. But you need to find the right attorneys, transfer agents, managing broker-dealers that know that retail space and that can advise issuers on how to best bring a product to market that fits their capital raising goals as well as investor demand. It needs to be a both and.
Yeah, like everything, homework is essential, right? Mm-hmm. So when you're looking at the space, what is the ideal sponsor profile? I mean, who should be coming into this market?
Sure. So number one, they need to be very investor centric. You need to be thinking about the fact that you're managing money for the mass affluent. It's not some sophisticated institution, so they need to have a very investor-focused mentality. And nothing really exotic. Again, you don't need complicated strategies. So, real estate companies that are trying to raise capital, private equity, private debt, there's a lot of growth in private markets, and coming into this retail space can provide a great source of capital.
And so Greg, just to wrap up, we've talked about the proper type of sponsors and what retail investors are looking for, but what are the best types of offerings that should be introduced into the retail channel if you're really looking to have some success and to build, your place in this channel?
Sure. So people want things that they can understand, right? They understand real estate, they can understand investing in companies. So you want to kind of package that up in the form of an investment. And it can be a fund or a REIT or a BDC or some other structures like that. Right now, what's really popular is more income-based investing. Again, retirees are looking to replace their income, and so things that throw off dividends or distributions in a monthly or quarterly fashion can be great. The other thing, or a couple other things, is growth. People want growth as well. You have to keep up with inflation. And then the saying, it's not how much money you make, it's how much you keep. So many of these investments can also have some tax advantages to them. And when you look at the alternative investments, some of them can have all three: current income, growth opportunity, and tax advantages. And that's a great way to structure an investment to really attract investor dollars.
Gotcha. Well, the retail channel definitely can be very challenging. You have to do your homework, you have to be prepared, but it can provide great long-term capital raise success, and if you're targeting it properly and doing that homework. And one of the great ways to do it is, like Greg said, become familiar and active in ADISA, get to know people like Greg and others in the channel who can help you along. Well, Greg, thanks again for your insight and your wisdom. It's greatly appreciated. And thank you for watching. Remember, for all things alternative investment, be sure to visit www.adisa.org. Thanks again.